What's going on, everybody? This is Jack with the Trading Tribe, and we are back at it again today with some new trading content. Hopefully, everything you see today is valuable. Feel free to subscribe and like this video just for a little bit of feedback my way. Really excited to share some tips and tricks with trading today. And today we're really going to focus in on some characteristics about futures in specific that are really important to know when you're trading. And this is a concept that can be kind of confusing if you're trying to figure this out on your own or online. And this isn't something that was explained well when I started. So kind of building this video out and building some of this content out for information that would have really helped me when getting started. And as you can see on my screen, right, the CME Group, which is one of the main exchanges for futures specifically, has published a website link that actually has all of this diagrammed out. But today we're actually going to be talking about what contract month codes relate to futures as, and some of the things to keep in mind with the contracts that you're actually trading, regardless of the futures instrument that you're actually using in the markets. And this is a really important concept because when we're trading futures, my bread and butter actually is natural gas, which is a commodity future, but all futures really have these different contract codes. And some futures actually only change codes quarterly, some change monthly. In our case today, we're going to be looking at this kind of monthly layout just because most futures are actually rolling on a monthly basis. And what this actually is essentially per year, natural gas, for example, really has 12 types of the contract, right? You can trade the current month, or what they call the front month of natural gas. So in our case, it is November. Trading December of 2022 would be what we call trading the front month, right? But we could also go and trade January 2023. February 2023. And as you can see, right, with the name, it kind of gives a hint there. But with futures, we can actually pick the month that we're trading that specific instrument. So for natural gas, right, we could go and trade next September's price if we wanted to. And that's one of the really big advantages with futures. It's a really cool way to hedge your position, especially if you're actually using these commodities out with your business. And that's what a lot of these big investors are actually doing, right? They're hedging their business or hedging their portfolio with some of these later month contracts, if you will. And one of the really important things is we always want to be trading the front month, especially as day traders. What we typically want to focus in on is the month with the highest volume. So every month we do what's called rolling our contract. So right now, like I was saying, right, it is 11/26, 2022. So it is the end of this month. We're approaching the end of this month. For the past 30 or so days, we have been trading December. So with futures, you're always trading that future month. So in, all of November, we've been trading this December contract. And then at the end of November, and we'll take a look at this on the charts and how you can see this actually in my platform, but at the end of each month, the volume actually tends to be higher on that next contract. And right when that volume becomes higher in the next contract, that's when we actually want to roll into the next contract. So switching from December 2022 for natural gas to January 2023 is really going to be primarily volume based for traders. And across the board, regardless of what futures contract you're trading, you always want to be cognizant on that daily volume and what is the most active contract. Because as traders, right, we want to be trading that most liquid instrument. And this is a really important thing that you want to keep in mind when trading futures. And we can jump over to Thinkorswim now. So on Thinkorswim, if you open up the panel off to the left, some of your screens might look like this. We can actually choose this little arrow icon that points to the right and open up this panel, if you will. And this panel can have your different watch lists. So I have a bunch of different watch lists because I trade all sorts of different instruments, but you can easily add kind of a widget for that watch list. And in my case, I already have that, right? I have a watch list for natural gas, and I have two natural gas contracts to kind of illustrate this point, right? So NGZ22 was what we were just looking at, right? So if we pull this up, right, and we look at December, December's month code is Z. So /NGZ22 essentially means I want to trade natural gas, I want to trade the December contract, and I want to trade it for the year 2022. Now, we also always want to have that next month on our watch list. So you'll notice on my screen in these videos, I usually have both, and that's because at some point, right, we'll notice the next month is January for 2023. So I actually have that on this watch list where I have the /NG F23, which again just means I'm going to trade the January 2023 contract for natural gas next. And we'll notice, right, the volume for the Friday of last week was actually higher on this January contract. And that is our primary indicator that we are ready to roll and actually trade this new contract. Couple important things here. This is not automated. It is on certain brokers. So if you use NinjaTrader, I know Tradeovate sometimes can do this as well. There are settings on certain brokers, especially ones that specialize in futures, to kind of automate this, right? So that you don't have to check this. But typically right around that last week of the month, this contract adjustment is made. And obviously, there's 4 times more volume in this case on that future month, but we're still in November, right? So it's a little bit counterintuitive. You might think I want to wait a little bit and actually just switch when we get to December, but we actually want to be cognizant of volume. And another big thing to point out is there will be a notional price difference, right? So we'll notice the January contract is in the 7.2 range and the December contract is in the 6.8 range. So they're fully different instruments, right? You're trading a different month, a different contract. And so please keep in mind that, right, when you're swing trading or when you're day trading, you might need to remark those charts when you actually do roll. A lot of the chart will look the same. So if we actually look at both of these, they're going to look very similar, right? The December contract ripped all the way up to 7.7 and then it's had a pretty healthy pullback. And if we look at the January contract, right, very similar, but it pulled up to 8.1 in this case, so a lot higher, and then it pulled on back. So very similar price action, but we'll notice the actual price and the actual numbers are different between the given contracts. So hopefully this helps. No, it can be a little bit confusing, especially when you first start with futures, and you'll notice right across the board, right, even if you're looking at the S&P 500, there's always going to be those weird characters behind the scenes, and that's what these map to. These are what we call the month codes, and we always want to be trading that front month when we're trading in the markets. So hopefully this helps everybody out there that's getting interested in futures trading and excited to bring more content your way. Thanks, everybody.